I know you like threes, and I got asked 3 times what I think about Canadian oil stocks. I wish that a real, and other investors, I should say, would pick up the phone and ask me those same questions, because most of them don't care a lick. But what do I think about Canadian oil stocks? I mean, I think along with our Quad 3 call, if you have oil price reinflation, then it's definitely good for those names. Our favorite name in that space is C&Q. Some of the integrated plays, there's not as much upside to capture just because they're hedged internally. A name like that would be Suncor, but we really like C&Q based on the balance sheet and the free cash flow generation profile and just their competitive position within the basin. So, you know, I think it's interesting. No one actually asked me about that on a normal day.
Well, it wouldn't be hard to get this stock CNQ if you're looking at it right now. On pullbacks again towards the low end of the range, you want to buy energy, oil, and Canadian oil stocks. In this case, CNQ. It wouldn't be hard for. It would just be back into the low 30s if it went back to where it was at this time last year.
Right.
You know, so you know, what is the biggest reason why institutional investors? I mean, there's a lot of. This is a loaded question, but I mean, why are institutional investors just genuinely disgusted or disinterested in energy stocks in general, never mind Canadian energy stocks?
Low returns.
Yep, terrible.
Low returns and no shareholder, I mean, I guess no economic, what's the word I'm looking for? Economic earnings growth, right? I mean, there's just been cash burn for 5, 6, 7 years as we've gone through this whole shale boom. So, I mean, we did a huge deck on the midstream space. You have returns that went from 12, 13% to 8, 9%. And obviously these things were bid up in 14, 15, and 16 when they were valued on a yield plus growth basis. And then, you know, the efficacy of that model was proven wrong, I think, for the most part. And now you have a space that trades in line with the S&P, which is probably where it should be. But I think people are hesitant to wade back into the waters because of the issues that have been very apparent in the past. But we're doing some work on the E&P space right now, and you look at these guys, they have, for the most part, very good balance sheets. 2018 was a year where they were very conservative, and returns looked great with the drill bit. I mean, recycle ratios for, I don't know the exact number, but over 50% were in excess of 2 times, and kind of the general rule of thumb is you need a 2 times recycle ratio in order to earn your cost of capital. So no surprise that some of our favorite names on the long side are gas, and they have the best financial metrics and the lowest sentiment, so we continue to like those names. But yeah, I think that's kind of the general reason why people are a little bit afraid to wade their toe back into the water.
Yeah, it was also the worst performing sector in Quad 4 and Q4. You know, energy got pancaked, so you could see how people have that recency bias is what they call it in behavioral space. Recency bias. You have a fundamental belief that what just recently happened to you could continue to happen. Sound familiar? I didn't come up with that. Some people win Nobel Prizes for that thing.
Want more Hedgeye? Subscribe to Hedgeye Risk Manager, the holy grail of risk management investing tools. This deluxe suite of investing products includes ETF Pro, Investing Ideas, Market Edges, The Macro Show, Early Look, Risk Ranges, Real-Time Alerts, Plus, Macro Select, and our quarterly investment outlook. Try Hedgeye Risk Manager today. Now for the low price of $24.99 a year.